the goal of this class, let's click on this, is going to be to understand Darvas boxes and be able to use them by the end of this class. That's going to be the goal. So you should be able by Monday to be able to do this, right? Now, if this guy can do this, then pretty much anybody can do this. And it's a really very simple process. So what's going on, buddy? So let's just get right into it, okay? So Darvas boxes, they're created by someone that had zero background in stock trading, all right? So this guy went to school, was an economist, went to school in the 20s to study economy, right, economics, and then hated it, became a dancer, became a professional dancer. In his free time in dancing, the guy read over 200 books, studying this like a course. Now, the only reason I'm bringing this up is that a lot of people that look at trading are looking at this and watching Get Rich Quick. They're watching stuff where they're seeing people, oh, I only work an hour of the day. The first hour of trading is all I do. Okay. That's how you make a little bit of money. It's not how you make a lot of money. And it's certainly not how you're going to be consistent and have a process that you could simply put on and then just change your time frame with. So keep that in mind. All right. So the way that he does this and the way that this works is this is a trend following focused system on price and volume. Okay. So I want to make that clear. It's trend following. And what does that mean? Well, trend following very simply, what's going on, SF? Trend following very simply means that you are following a trend, right? That's not complicated. So just so we're clear, the goal of this strategy is to capture the meat of the move, not the inflection points. Meaning we're not trying to pick off the bottom. We're not trying to pick off the high. Okay. We're trying to capture the meat of a move. So you're always going to be paying up for a stock on your long positions, and you're always going to be paying down for your short positions. Okay. It's not meant to capture the entire, the inflection points, right? That's not what this does. It's a trend following system. And so you're looking to say, hey, is this trend going to continue? Yes or no? That's what this is good for. So it's really important because that's very different than some of the trades that we've been doing lately where we're trying to catch bottoms. Okay, this system is not about trying to catch a bottom at all. Matter of fact, it's the exact, in my opinion, it's the exact opposite of it. So just keep that in mind when you're learning this. I think this is a great trading strategy to use. I always say to use these indicators as a toolbox and pull them out when they're useful, right? You don't always want to use a screwdriver or a hammer. Sometimes you need an Allen wrench. Keep that in mind. And we're going to talk more about how I've tweaked this for my own trading. So let's just start. Let's just get into it. What's going on, Fatty? So let's just start to get right into it. So if you're looking at this, when he first started this process, what he would do is he was only looking for 52-week highs. That's all he was doing. Okay. That's how he started doing this. So he would look at a chart, take Google, for example, and his first position would be when it hit a 52-week high. So if you take Google, as I have it up here right now, what he would do is go, oh, here's my breakout. Okay. And now I'm breaking out, right? Hold on 1 second. I'll show you. And he would want to say, so like, let's just say, let me give you a year, right? So here's a year. Okay. And so he would let the stock break out. And then after it broke out, like, let's say that we're here and this is your breakout, right? Then from that line on, he would draw a box, but it would start with a 52-week high. Well, that's not what we're going to do today, but I just think it's really important. And let me click off of that for a second. Let's open this up. I just think it's really important to understand where he's coming from beforehand. So you understand how he was viewing it, right? So here you are, right? It has to close above the 52-week high. The bars always have to close above. It's one thing I do like about this, right? It can't just go over there. It's got to close above it. So that was his 52-week high. That would be the low of that after that 52-week high. That would be the size of your box. And we can see clearly here what day broke out of that box and what day did not break out of that box, right? So that's how he started this system. And I'm going to give you several examples of this. And then I want to give you examples on how you would actually enter and exit these positions. And we'll get very specific, but what we're looking for is we're looking for outsized volume, right? You want to have outsized volume here. You do not want to have small amounts of volume, outsized volume, and that's pretty much it. All right. You don't want to have a below average volume at all. What's going on, Oven? So let's just talk about this and go through it. Now, there's different ways to utilize this, right? Long and short. So this system, and why I wanted to go over it today when looking at it, was it works really well when coming out of bases after massive corrections. All right. So it works really well coming out of bases of massive corrections. Okay. And that's really important to understand, because that's what we're going through right now. People are looking at this and going, did we bottom? Did we not bottom? And quite frankly, we just don't know the answer. We just don't know the answer to that. So what we're going to do is just take a look at some examples, all right, on how you could look at this and determine whether or not this is going to set up properly for us and whether or not it's something that you can utilize in your trading. So instead of looking at this and saying, I'm only going to use this for 52-week highs, I'll tell you how I use it, and then I'll overlay some things later to help even get even stronger positioning with it. What I would do is I would level it on anything that has hit a recent high, okay? And then after it hits a recent high, takes out a low so that you have a clear box. So I'll give you an example, and we're going to walk through these. And I'm going to give you the entries and where you would probably place your stop. All right. So let's take DocU as an example. All right. So this is the high of DocU when we break down. All right. And then this is the low right here. Okay. So we can go across with this bar, go across with this. And then as time goes on, we take out a new high, right? So this was my base, and then I take out a new high, but I never close over it. So that really doesn't count, right? So now I have this box. And let's just get this right to there. So now I have the box, okay? So if I'm going to trade off of this, my entry, and I'm going to do these while we're here so that you can see exactly how to do them, is going to be right there, okay? My entry is going to be the break of this. So I'm going to have to use this right here, and this break over that box is going to be my entry. So what you're going to see is it makes it real simple. Okay, until I'm over that, and the high of that box is going to be this pivot point right here, I don't go near this. I don't buy it down here assuming it's going to break out. If I'm following this box structure, this is exactly how you trade this. Okay, that's exactly what you're looking for. You need it to break out. Once you break out, then the trade is on. All right, so now my trade is on. Now, what do I do about my trade being on? Well, now I'd have to come up and say, I need a, I'll do it this way. It'll be simple. All right, so there's my bar. All right, so there's the bar. There's my breakout bar. Okay, so what people tend to do is your stop must be in the box. So I'll say that again, your stop must be in the box. For these trend following systems, I find that what they do a lot of is they'll come to this stop and stop you out. Okay. So I would say take a smaller position size and use the previous bar to the breakout. Okay. That would be my advice. You can do whatever you want, but my advice would be to put your stop here. Now, once your stop is there, okay, you now have your position. So this is your entry, and there's your stop. Okay. So I'm going to run through a bunch of examples of this, and then we can kind of talk about it. You can ask questions, and we can go from there. I'm going to show you some additions to this after we go through this that you can, to tweak it to make it even stronger. But there are your things. You need it to go. So now you have that breakout. There's your stop, right? Okay. So we understand that. Let's take a look at this one. This one is very, very simple and already mapped out for us, okay? So here we have Tesla. Tesla's basing here, steps right here, steps down, steps right here. Well, we could look at this and we could come out with several boxes, which we're going to talk about in a moment. But we can see that there's one right here that makes the most sense, right? And we can see that pretty clearly. Okay. So we're up. We refuse to take out this higher high, and we're up, right? And now you're here. So from this period of time through this box, this was the high. So now you're here, and this is your low. So now we have a box that's right here. And I'm going to explain this in greater detail in a moment. So I have a box right here. So my entry, again, and I'm just going to show this, is going to be that next bar. Okay? That next bar right here is going to be my entry. All right? That's going to be it right there. Now, if that's my entry, then my stop is not going to be here. It's going to be here. All right? Simple enough, right? There's your entry and there's your stop. Okay? Now, let's keep going. And again, once you learn how to draw these boxes and you get familiar with it, it's very simple. It's like, oh, am I in the box? Okay, leave the trade alone. Now, I do want to get into re-entry if stopped out. We'll get into that in a moment. But I do want to get into the fact that you can use this on any time frame. Your time frame does not matter. So in other words, it doesn't matter if you're looking at a minute chart. It does not matter if you're looking at a month chart. None of it matters. It all works the same, and I'll show you what I mean by that. So let's just go here and take a look at Apple. Let's look at a 1 minute chart on Apple. Okay, so here I have a chart. Now, if I was looking at this and I was using it from a Darvas perspective, I'd want to hit a new high, right? Before I would get into this. And then I would put it on because that's what he does. Well, that new high could be 52 bars. That could be here. And then this would be your first entry. All right. Why I don't do that is because this box system makes sense at varying levels. So for me, I see a big breakdown like this, and now I see a low, and then I see a high, and I want to utilize that. So what I see as a high could be right here. And then I see it tested, and then I see a low undercut right here. Well, here's my box. Okay. So there's my box on Apple. This one was perfect on Friday. So what I would do is this is my entry, the break of that. Okay. This is my exit. Okay. Or stop. All right. Now, after I have that, I don't know why it's doing that, but whatever. So after I'm doing that, okay, I'm in. Now, how you manage that trade and capture this, we'll get into in a moment. But what we're seeing here is we're seeing the ability to get in these even in downtrends if you utilize these boxes properly. All right. And there's several ways to determine this entry. You want to make sure that you have above average volume. That's definitely a key thing. You want that volume to be above that 20 line, right? You always want to make sure that you have volume there because that's really going to be your driving force. So if you look at it from that perspective, you could then start looking and seeing if you could determine other boxes that could set up and how those boxes are going to look. So here's RBLX. Now, what makes this so attractive to me and why I'm doing this today is because you've had a stage 4 downtrend. So stage 4 downtrends are when you're just basically imploding, and right, and you're trying to buy and catch the bottom, and you never do, right? You need the bottom to come in. Maybe it retests that bottom and undercut. Maybe it doesn't. But once you put a bottom in, okay, and you think that that's your bottom because now you're here, then you have a top that's put in right here. So now what you do is you use the bottom, okay, and then you use the top of that right here. All right, and now let's just go through this and blow this up. And let's just make this even bigger. So here's your top. Here's where you did not close above it, closed above it. So this is very simple. This would have been your entry, okay? What Darvas did also at the same time as he entered two trades at once. Just be aware of that, right? This or this. You see this? 33.96, 33.90. The lesser of the two is your stop. So your stop would be here. So the lesser of the two is your stop. So now you're in this trade, okay? And you're in this trade for, let's say 34 to 30, what? 36 and a half. So you're in this trade for the $2, all right, worth of risk. And now you're in this, okay? So that's your entry. Just remember that. The stop is always the lower of these two bars. That's where I would put your stop. You can put it wherever you want, but the stop definitely needs to be in the box and not outside of the box. That never changes. Now, it's going to be one more on the long side, and then we're going to do some short sides that you can review. So this is very simple to use. It just becomes something that you have to use in practice. And you can use it on, again, multiple time frames. We're going to go look at it daily right now. All right. So let's go look at this daily chart. Okay. And if you look at this, you should be able to spot them, right? You should be able to look at this and go, okay, this is exactly where it should be. And it shouldn't, it starts becoming like second nature. At least it should start becoming like second nature when you're looking at these kinds of charts, right? That's what you're focused on, to try to get yourself to a position where this becomes second nature. So how would we review this chart? Well, here's the top peak, right? We've broken down. We're not using 52-week highs. Okay, that's how he's used it. That's not how I'm using it. So you can use it for that, but I would argue that you can use something else. So here you are, all right? And here's your high. Here's your low. This is the box, okay? This is going to give you a really good example on why I set my stops where I do. So this is your entry right here, all right? This is your exit right here. Now, as you can see from this, you undercut right here. You didn't close below, but you undercut right there. So I'm going to strongly suggest that if you go through these and you test this on like a back testing system, which I recommend that you do if you're into that, you'll see that using this as a stop is going to be way more advantageous than using this as a stop. This is where they're going to come and try and hunt you. Okay, they're going to try to hunt stops right here because that's what people use. So you do a smaller position and you do it on the other previous bar. Now, this would have kept you in the trade, and then you would have profited greatly from that. So that is longs. Okay, they should pretty self-explanatory. In regards to shorts, you know, I'll give you some really good examples that this worked perfectly on. So all you're using is a box. I mean, that's really all. That's all I'm getting at here, right? So far, all we're using is a very simple box, and you know, it's kind of interesting because you know there's nothing to overthink, and to me, that's like one of the that's one of the beauties of what he's done there. There's very little to think about. Now, if you take this level right here, okay, and that marks a low, right? That would mark a low, right? We would all agree that would mark a low. And then we would go up and we'd look for that high. And we have that high right here, okay? So now we have this little box right here, all right? And once you break that little box right here, that would be your short. So let me just blow this up so that we can really get in there and pull this down. All right, so right here is your entry, okay? Right here, you could say is your stop, right? Because this bar is still actually in there. Hold on one second. Yep. So that bar is actually still in there. This is the breakdown bar. That spot there becomes your entry. Okay, now you're in, and this is your stop. And you'd be in for, this move. I don't know what this was. This would have got you in at 189. Whether or not you stayed in it and kept that stop and kept moving the stop down, that's entirely up to you. But this went to 107 in less than how long? So 47% in 2 months, month and a half. So what I'm getting at with this, and what I want you to take away from it is this, okay? This is a very simple thing to overlay, to look, that takes all the second guessing out of this, right? You overlay this pattern, it either fits in this pattern or it doesn't. And I do want to just stress something, okay? This is a trend following system, right? So what's my trend? My trend's down, right? It didn't pick off this up here, right? And I want to make sure that you understand that. So like, it didn't pick this off. A matter of fact, it got us into trouble here, because here's your 52-week high, here's your low, right? And here's your reversal. So you could have said, yes, when it broke this, I'm out of this box, and this is the new box, right? And that's actually a short, and that's a reversal. But this isn't determining if they're reversals. This is determining if the trend is going to continue. Well, if you're looking at this, right, and you're studying this trend, and you broke out here, right? Even if you used this, well, you would say, you argue this, right, is one big box, right? But the problem with that is that you never what? What didn't you do there? You never closed over that big box, right? So you can see you have a box within a box. We're going to get to that in a moment. So I think it's important to understand that when you're doing these, you want to do them with the trend, right? You don't want to do them not with the trend. You want it to take out that high, see where the low is, create the box, right? I mean, you can see that right here. So the important thing is to understand that you're trend following, okay? You're not finding inflection points. You're not saying we're going to roll over here. You're just following the trend, whatever that trend may be. That's what you're doing with this system, okay? And that's a very important distinction for people, because a lot of people don't think that way. They think about, oh, I'm going to catch the bottom. We have systems in place and processes to do that. This is not one of them. So again, time frames, they really don't matter, but we'll run through a couple more of these. And then I'll give you some things that you can overlay with this, and then I'll take questions. So August, I think I'm around here where it works out perfectly for the example. So again, the trend is what? Down. Okay, we can see that, right? So you come here and you make a new low, right? And then you come up, and now this becomes the high, and you just come across and you have this box. Now you take that box and you go, this is my entry when I'm out of the box, not the bar. When you're out of the box, that's your entry, okay? Whether you wait for the close or don't wait for the close is entirely up to you and how you trade. But this is your stop right here, that previous bar, all right? And this would have captured I don't know. If we took it the whole way down, let's just say that you did, or you got stopped out here on that higher high, 38% is what you made, 6 points, 5.5 points, call it 5. All right. So it's really important to understand that you're waiting for that break and then you're putting it on. If you look at, I'll give you one more example of this. And then I will give you I want to show you something on a weekly basis too, just so you can see one more. But let's just do one more short, because I think we're getting it. But let's just do one more just for the heck of it to make sure. And then I'm going to overlay a couple other things with it to make it even sharper. And then I want to show something else. So here's Peloton, right? Now the trend is what? Down. Okay. But if we take a look at Peloton, we already know that it's down, right? We can already see that. And now we're trying to figure out, did we miss this move? Did we miss this, or did we not miss this, right? We're trying to figure that part of it out, right? So we're looking at this and going, well, maybe we missed it, maybe we didn't. Well, here's a 52-week low, right? And this is what's so fascinating about this, what I like about it. This is where somebody might say, I'm going to short it when it hits a 52-week low. Well, how'd that work out, right? Not very well. If you shorted here based upon this being a 52-week low, you didn't do very well. Well, how could you have done better? Well, here's one way you could have done. It hit a 52-week low. Now it's on my radar, right? Come out here, create this box. There's your high, right? And now we just want to see when this box breaks that level. So let's just get that perfect. Great. And then we'll blow this up. So, okay, this did not catch this reversal. All right. And I really want you to understand that. Like, this is not catching that reversal. It's catching the trend continuing. It's trend continuation is what you're catching. So here is your entry. Here, right? That bar right there is your entry. Here is your stop. Okay. And you're still in the trade. You're still, now, did you catch all this? No. But you caught this from 19 and now you're still in it, or you blew it out down here, or when you started taking out new lows, you just started moving it down. It doesn't matter, right? That's all risk versus return. And I would strongly suggest that you use risk versus return ratios that we've gone over previously with these. But now you know where you're at. So now you have this figured out. But what we want to do is we just want to make sure that we get the concept of where we are in regards to different charts. And I'll do this last chart, and then I want to go over and overlay some other things with it. But it's really just important for me for people to understand this on a weekly basis. Okay. So for me, I see a breakout like this. All right. And when you see a breakout like something like this, you're probably going to want to pay attention to it. Right. But you have to make sure that you're in at the right time and that it's the right bar and your stops correct. Okay. So let's look at this from this perspective. This breaks out and then never closes over. So we know that we know that it starts right about here, right? With that first breakout, but we never close over, right? So now we have a low. Well, this is the first bar that closes out of that box. First close out of that box on a weekly chart. So that's what I'm saying. It doesn't matter. Okay. So I take the lesser of these two for my stop, right? Which is going to put my stop here. Okay. And that's what I'm saying. You could literally use these with weekly charts, monthly charts, and you're not staring at your screen all day. There's your entry. Here's your stop. Okay. You've never been stopped out of this since you used that. And you've rode this the whole way up to here, down here, back up to here. I don't know how far you rode it for. Let's just say that you rode it up here and then this was your stop, right? So you're in at 135, okay, and you're in at 116. You made 20 points, okay? So you made 10% on your money over a month and a half. Now, works the same way. Does not matter what your entries or exits are, long or short. All that matters is that you catch the move. So here's the breakout, right? We got that breakout. Here's that low of that breakout, okay? We could see that it failed, right? We could see this low right here. We can see this coming across, right? So we know that we're all in here. We know that none of these bars, right, have closed over this. We can see that very clearly, right? So if we go to here and go, well, now I have to get below this point. Let me just click on one of these. Now we know we have to get below this point of the box in order, right, to put that on. And so that's going to be right here. Boop. There we go. All right. And then where's your exit going to be? Well, your exit is going to be right here for your stop. Okay. So what did this do? Well, we can see that we thought maybe there might be a trend reversal. We tried to take out the high. We failed. This is a double bottom. It's a perfect double top. You undercut here. It flows perfectly with this Darvas box. The Darvas box breaks. You've never looked back. You've been in that trade the entire time. You had to do nothing with the trade. Now, if you used, I'm going to close on the first higher high week. Okay. You never had a higher high week until you got to about here, and then you made a higher high. So maybe you closed that here. And if you just think about it from that perspective, using a higher high close, and you're using closes to make those decisions, right? And then it makes a higher high, you're getting stopped out there, right? 47% in a month or two, 60 points, right? So now, how do you make this even better? How can you look at this and make this even better? Well, the first thing that you could do is you could look at some of the things that you've already used, right? So now if you look at Darvas Boxes and saying, how could we make this better? Well, we know some things that work, right? So one of the things that we do know that works is RSI, right? So we know RSI works, and we know that volume works. So if we go here and we overlay RSI with this, and this system of just quantifying where this box is, and we look at the RSI, well, we can see that we've got a positive divergence happening starting here, right? So we can see how this is going flat, bouncing around, but this divergence just keeps going higher and higher. So that would give us more confidence that this box might work, okay? Just going to leave the arrows there for now. So that's the first thing that we could do. We can overlay on this kind of chart, we can overlay an RSI, okay, and look for positive and negative divergences. We could also utilize this as determining when these boxes may not work and when they might work. For example, if we have a high RSI here and we're looking at a box over here, right? Because you can have multiple boxes in different time frames. And when you're looking here and you go, I have a negative divergence. Well, when you buy this, you might not buy this box because you might be like, you know what? I've got a negative divergence here. Do I really have that much edge up here? Right? You might change your thought process a little bit, right? Because you're watching this happen, you're peeking out, you're watching the peak out, and you kind of go from there. So that's one thing that you can do to overlay. Now, another thing that you could do to overlay, and I would strongly recommend that if you're looking at charts right now, you use this. If you have, let's take XBI, for example, all right? And here's the box on XBI. Now, if I take XBI's box and I overlay this, okay, well, this is just flowing perfectly with it. RSI is flowing perfectly, so I don't really need to use that. We have these volume spikes that are happening, so that's going well. If you take the cloud and you overlay the cloud, right? The Ichimoku cloud's the one that I use. If you overlay the cloud with this box, it's going to put you in the right space. If you find positions that look like this and you put these on, your hit ratio and percentage of profitability is going to go up dramatically. So I'm going to say that again. When you're coming out of bases, if you get above this cloud and at the same time you are also above one of these boxes on a breakout, the probability of this working is substantially greater. Okay. Now, if I wanted to just walk through this, it doesn't happen often. Okay. So if you are to look at this chart, right, just by rule of exception, okay, it did not happen here, right? Even though you broke out. Okay. So if you're looking for this, it's not happening. You hit this, you have to get above it. You didn't get above it. So you never would have done the trade, right? And now you're below it the whole time. So the only time that this has happened, right, this year for the past 12 months is one time it's happened here. Okay. It's not common. Now it's happened here. If you go back further, take this high, and then you wait to take out that high, right? It's happened here. Okay. And then you can see how that worked out. And that led to this move. So if we go back 2 years, what I'm suggesting a daily, now you could use this on different time frames, but I like using the cloud on a daily time frame or 4 hours or hourly, nothing really less, but people do, they day trade with it. But if you overlay this, I've gotten the single twice in 2 years. Okay, maybe that's something that we should pay attention to. And when we see these, it might give us more confidence to act, right? Same system, same setup, but that might be something that we would consider doing. Overlaying the charts with something else that we know that works. Okay, if we can do that and overlay this, then it gives us better opportunity. Now, another thing that you can do on a daily chart or a weekly chart is you can increase your position size the entire time you're doing this. What do I mean by that? Well, let me give you an example. Okay, here you are in the 1 minute. Let's get rid of all the segment lines. So this is a box. Okay, so this runs up. This is also a box, right? So there's also a box. So instead of selling into this, I could say, I'm going to see if another box sets up. Another box sets up. Instead of selling into it, you increase your exposure. Another box sets up right here. You increase your exposure. People always say when to add. When's the best time to add to stocks? Okay, if you use these boxes, you see how you ran up here? Okay. So I've added 3 times. It's up to you how many times you want to add. I would not call this a box. It's too small for me. But if I went to here and went across here, all right. Now, this one got you in here, and maybe you got stopped out of the whole trade right here. It's very possible you got stopped out of that whole trade right here, right? So let's say that you did, and that's where you got stopped out of. You have 3 adds to this, okay, during that period of time, right? So you're increasing your exposure as the trade's working, right? Some people will trade like this, and it makes a lot of sense because their sense of it is, okay, so let's say the trade doesn't work here and I get stopped out here. Who cares? Because I have this cushion. And if it really does turn around and go, then it could just keep going. And you can do this for any time frame. Any time frame. So if you're like back here, let's take a look at this. All right. So if you're looking at this and this is something that you want to be involved with, you could buy here. You could look for another little setup like here and put it on again, right? You could be back in here, use this one. You would have gotten stopped out, but you see where I'm going with it. So it doesn't really matter. You can do it. You can do it here. You can do it on a weekly. It doesn't matter. Right? What you're looking for is you're looking for places that this makes sense to do this, right? Now, you had a lot of wonky stuff happen in 18, 19, 20. If you went back to something like this, okay, and you went back to 16, I don't think the monthly chart will actually show it properly, but maybe it will. But if you went and looked at something like this on the monthly chart and where you would add, you could actually see how this would have kept you in this trade, adding to it over and over and over again, right? So something to think about, but by adding these even on shorter time frames and increasing your risk as the trade is working, okay, will increase your profitability. Eventually, you're going to get stopped out, whether you got stopped out in here or you didn't get stopped out because of where your stop is, right? Eventually, it's the lesser of these two, and eventually you'll get stopped out, right? It's just a matter of time. Increasing your risk while you're doing this, the simplest thing to do with this. And again, you can use the cloud if you want. I mean, this pretty much told you the trade was over. I don't use it, but you can use it there. But look at this. If you overlaid this, right? If you're using the cloud, it tells you when you're done, right? But let's say that you're not using the cloud. Let's get rid of that. If I start looking at this, hitting highs, and this isn't, well, I know my trade's getting tired, right? And then it might revert back to this level. And then maybe I just get out of the trade. So that's it. That's as advanced as I want to get today. I went over a little bit, but I've got about 20 minutes. And if you have questions, this is when they ask. So, and I'll hang out until we have questions for the next 20 minutes. I'm going to start trying to end these exactly at, what's going on, Fullerton? I'm going to try to end these exactly around that 1 o'clock mark, because I know people have things to do and they want to make sure they don't miss anything. So I will, if you have questions, ask. It's very simple, but you need to follow it. If you don't follow it, it's not simple. And I want to remind everybody, this is trend following, right? You're not going to look at this and pick off bottoms. That's not what this is doing, okay? It's how to short stocks, how to go long stocks when you're looking at trends and you're not sure how to get in those trends. When you're seeing Apple break down and you're not sure that you understand this RSI positive divergence and you don't really want to try this and see if that works, now you have a very simple setup here where you're in, right here, 146, and in this position, you were risking a whopping 15 cents to be in that trade, right? It's nothing for you to see if that works. Nothing, right? It's less than a cup of coffee by the time you're done. So, well, it's more than that. It's a steak. So you see where I'm going with it. So I think that it makes a lot of sense for people that are struggling a little bit with when to enter to overlay a trend strategy in here. right? That's what I'm getting at. So, but I'll open and I'll take questions. I want to see somewhere. It's a good question, John. I want to see somewhere between 10 to 15 for me to really call it a box. There's 3-bar patterns, there's different things, but for you to really have a box, I want a definitive. And this is, charting is an art and a skill. Okay. And it's open to interpretation. And this definitely is open to interpretation. And there's boxes within boxes. So how many make up a candle? So I'll give you another one, right, on how to do this. So this was another thing I really wanted to go over, and I'm glad you just brought this up. So to me, I'm looking for like 10, right? But some people want more. What I would argue is that it doesn't matter. So like, let's remove this polyline. I don't care if it's 10 or 15, but it has to look like a box. Okay. How would I look like a box? Coming down, having some kind of retest in there that either breaks or doesn't break. It doesn't matter if it breaks or doesn't break, right? It's a trend following system. So I don't care if this happens or not, but inside the box, I want to see some kind of retest usually. Okay. If you take a look at these let's go to the 1-minute chart and let's look at the Apple trade and we'll go from there. So I want some kind of retest. So like I hit a high and then I came back and I retested and then I broke out. I hit a high, then I pulled back and then I retested and then I broke out. I hit a high, right? Didn't close above it, broke out. Okay. That becomes my stop. So yeah, I want to see some kind of test in my box, right? That's what I like to look for. That's one of the things I try to look for. And to answer your question, I just want to point out one more thing. You can have a box. To me, this is my interpretation of the best way that I found to use this tool. This is not exactly how he uses this tool. I want to be really clear about that, right? It's open to interpretation. He uses it when it's breaking out a 52-week high. So what he's looking for is like this, and then it breaks out and then he forms a box. Well, that box never formed. So he would have missed this whole trade, right? Unless you're saying that this whole thing's a box, right? So that really depends on how you look at it. But for me, I want to see a retest in there. And then there's boxes within boxes. So like this is one box, but here's a high. Here's a low. Well, this low never got tested, but we did have a retest, right? So you could actually argue that here's another box within a box. So if you were in Tesla and you're buying this break of this box out, right? Well, then another box or another entry would be the break of that box. Okay. So that's another way that you could scale in and add to your long positions, looking for boxes within boxes, right? You could make that argument, right? I'll give you another example. Okay. Here's another one. Right. Now you're going to have to see how this plays out. Right. But as we're stepping up, you're getting boxes within boxes and you're breaking out of them. Eventually it will end, but this is what you'd be using for entries, right? This is what you'd be using for entries. You have 3 entries there, and this is what you'd be using for them. So when people say, well, when would I add again? Well, if you were using Darvas's system and you wanted to increase your exposure because you think Tesla's going to 3,000 or whatever you think, here's an entry, here's an entry, here's an entry. Okay. So it depends on how you want to trade. I want more than 10 days, but there's an example of how you could use boxes within boxes and extend out your time frames on it. And it's not, to me, that's not really debatable. So I hope that's helpful. So you're supposed to wait for the close. Okay. You could put the trade on, Kobe, but you got to wait for the close. If it doesn't close there, like, look, I'm the first in an environment that I'll put the trade on, and then if it doesn't close there, I'll blow it out. Like, I'll give you a great example. Okay. Let's use this one. Okay. Let's use one that didn't work. So let's say that I'm looking at this box, right? Let's say I'm looking at this box, Kobe. And let me pull this down. Hold on 1 second. I'm going to blow this up big time. All right. Okay. I may have pulled the trigger on this. Like, let's just be blunt. I might have looked at this and said, I'm not coming all the way down with the box, but you get where I'm going with this, right? I mean, the whole way down with the box is down here. But so what I'm just pointing out is the high, the entry, right? Not the box itself, but just the entry spot for the box. So I may have printed that. As a matter of fact, I think I did buy that, right? And then when it didn't work and I didn't close over that higher high, I was out. I was done, right? And then I remember even some of the position I used down here, I got out. I'm like, I'm getting out of the way. And I got out of the way, right? Should have gone, didn't go. So that's what I would use. You could enter there, especially if you're looking like on a daily or a weekly. But if you don't close there, you need to get out of it. That's your stop. Just get out and go forward and wait and try again. You can always re-enter. You can always re-enter. So that's what I would use and how I would use it. Close above the previous high, correct. What is the main characteristic of it? The way I see it, it's a price fluctuation within a price range. Yep. I would use 10 bars, like what John said. Exactly. Yeah, I mean, that's the whole thing about it, David. What you're trying to do is like, think of it this way. You have a sometimes you need an Allen wrench, sometimes you need a screwdriver, sometimes you need a hammer, right? Sometimes if you have a screwdriver and you put it on the back of a power drill, it goes a little bit faster. So think about it that way. It's kind of a way of supercharging what you're doing. But you have to make sure that you're utilizing them correctly because it'll give you the confidence to put the trade on. And you can see that, David, like you can see like you're not going to be able to find these all the time. Like you're not going to find that what I just laid out all the time. It depending upon if you're looking daily, I mean, it's like seeing a unicorn, right? Like if you're looking at what I just went over daily, and I used like XBI as an example, and it's one of the reasons why I am just like pounding the table on biotech right now, because you haven't seen this for 2 years, right? And it's one of the reasons I used it as an example. You have not seen this for 2 years, not since back here. Well, what was the single greatest move it had since the pandemic? Well, it was telegraphed by a Darvas box and being above the Ichimoku cloud. I mean, it's that simple. So if I could find that and replicate that at a bottom of a chart, right? I could be in this for, like when I enter these things, like I'm thinking, especially stuff like this, I'm looking at it and go, I could be in this for years. I could be in this and just keep riding it up and letting it come down and riding it up. And, I could be in this to 150, 160. So I think it makes a lot of sense to overlay those things, but everyone's got to make that decision for themselves. Yes. So he uses 52-week highs and 52-week lows is really what he did. He was more a long investor than a short person. But you're talking about someone that was born in 1922. So you have to take this stuff with the times. But that's what you have to look at. You have to look at that. And you can back test it if you want. The larger the box, so let's go back to Storm's question. That's a really good question and a very interesting way of looking at it, Storm. So let's use what Storm's talking about here. I get up the indicators. So the bigger the box and the wider the box and the longer the trend in the box, the greater the chance that the trend is going to continue. So breaking out of one box is great, right? But as you keep getting through them, there's all signs that the trend's going to continue and that you're on to something, right? They're definitely signs. Yes, there's no question about it. Also, the other thing that I would say to follow that up is it's not just the bigger height wise, it's the longer the box. So like things like this, right? I can get rid of this. I have to rewrite it all anyway. And I can really get rid of all these levels and put them in later. But let's look at this, what I'm getting at here. So okay. So the longer the box, the bigger the move up when it breaks out of the box. There's a reason I gave a third BPA on this. If you watch the top 10 video, okay. I mean, and I want to just heighten this out again. So we all get this. Okay. I bought this little tweezer pattern down here, right? Because I liked it. And I'm like, we're going to risk 30 or 40 cents. Maybe it's going to work. Okay. This system and process that we're going over today would not have identified that. So I just want to make sure that people understand when to use this. You use this when you're trying to follow the trend. And that's what makes it so important, because if you can pick up and follow the trend, well, you're in pretty good shape, right? But these little tweezers like bonk, bonk comes down. I mean, to me, I'm like, okay, I think we were looking at RSI at the time too. Like, I got a positive divergence on the RSI right there, and I took out the lower low. Let's give it a shot. And that's what we did. Okay, that's how we identified that. This system that we're going over today will not identify that. It'll identify this, and that you have a big breakout coming if it goes through this level. And this could be drawn better. Yeah. No, I'm not going to play with this all day, but that would be better. And then this would come all the way back to like here. Oh, for God's sake. This thing's so touchy. I'll just leave it there. So this will tell you, yeah, the longer the base or the bigger the box, yeah, absolutely. It does make a difference. So anything else anybody wants to go over in regards to this? I will be in the room. This one we got done actually faster than 1 o'clock. I'll be in the room. If you have questions, feel free to ask. Watch this again. It's very simple technique. You just got to get used to drawing the box and, understanding where the entry is and understanding where your exit is. There are systems where people create, and this is exactly all they do to trade. This is all they do. They literally create computer programs, and they follow these and they just knock them around. So they literally set their entries and exits up. So go from there. So if you have a question, go ahead, shoot. But you put your entries and exits in, and then you go from there. That's what they do. Oh, you're welcome, SF. My pleasure. So that's pretty much it. All right. Any more questions? Entry. All right, here we go. Entry after closing bar, which means the following bar. No, it's the entry of the bar that breaks out of the box. So in other words, what you want to do. So if I was using this here, forget how far back this goes because I'm not going to play with it. I need to enter this bar, not the next bar. You're entering this bar. Just to be abundantly clear, you're entering this bar. The one that broke out, not the bar after the breakout bar. You're entering that bar that is closing above this. That's the bar that you're entering. Right? The bar breaking out that's shooting out. Yes, 100%. Yes.